The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein. I can always be reached at 631-647-4694. I'm here every Friday at 3 o'clock. You can also see me on my website, which is themainstreetcode.com. I have YouTube of all my radio shows, and I'm on Spotify and Apple if you miss one. And I encourage you to ask questions, and people do all the time, and it's all good, and we're here to help you. We help hundreds of advisors across the United States, whether they're accountants or money managers or banks. They reach out for us for insurance questions, whether it's life insurance, disability, long-term care, or fixed annuities. And these are areas we specialize in, and we get questions and stuff all the time. Just 2 nights ago, I was at an event that I hosted, and one of my members of my group is a private banker, private relationship banker. He does investments, and he's there when people have large investments, and he's their main guy at this very big bank. And he said, Neil, do you know anything about tax-free annuities? So we started to talk, and yes, I know a lot about tax-free annuities. How do you have a tax-free annuity? Has anybody ever heard of that? And a lot of times what happens is somebody has a settlement from a malpractice suit, or they become disabled, something happens, and they get this offer, whether it's a lump sum of money or an income stream, and he had no idea how this worked, and most people don't. I do. And you need specialists in this area. So here's how it works. You win a big lawsuit. In this case, these people came in to the bank, and they had their daughter, who was a student away at college, was treated at the hospital and ended up with sepsis and ended up losing her limbs. Horrible, horrible situation. Anyhow, the lawyer recommended that they have a settlement annuity and this and that. And there's 2 different ways you can receive money from a lawsuit. You can have like a verdict, which is a lump sum, or you could have a judgment that says we're going to pay you a certain amount of income for a certain amount of time and a lump sum, or there's all these different structures. The nice thing about having an annuity, and it has to be a very specific, it's called a structured settlement annuity. Most financial advisors, like myself even, are not licensed to sell them, even though I know what they are and I know how they work, and they're offered by insurance companies. They're very specific in that they'll pay for an income for a certain amount of time as part of a claim, and the benefits are 100% tax-free. So here's the problem. So a young person who's 30 years old gets this big settlement of $3 million or $4 million. She can't work again. There's all kinds of issues. This has to last her for the rest of her life. So the attorneys are trying to get the biggest settlement they can because they get a piece of the action. So whatever their agreement is, whether the attorney gets 20%, 30%, whatever the attorney's fee is, they want to make sure that they get a big settlement. So they get this big settlement. Now, what happens to that settlement? How do I have it so it's tax favored, so it's this, so it's that? So they may reach out if they're an attorney that does this all the time, and you have to go to the right type of attorney because many attorneys don't even understand how this works or know how to structure, or they may have a guy or a gal that they send this off to, that's their person, and they may or may not do so. So let's say they send you to a settlement broker. Well, somebody who's going to do a settlement annuity. And the lump sum coming in is $3 million in this case. So some settlement annuity, let's say they send it to a financial advisor. A regular financial advisor does insurance, he does investments, and they send it to the advisor. Well, the advisor is going to try and do money under management. He's going to try and structure it. He may try and do an annuity, but he's not licensed to do this settlement annuity, which is a tax-free annuity. So if he's advising you to do an annuity that's going to pay you an income, but yet you're going to get taxed on it, he really doesn't know what he's doing. Okay, he can hurt you. Okay, and that's bad. And that's his ignorance because he doesn't know. This is very specific stuff. So, and if the client's on Medicare, even though they're 30, maybe they're on Medicare, they're on a government program, you can't structure an annuity that's going to pay more money than Medicare will allow. Otherwise, it may become taxable, or they may not get Medicare. So it has to be structured right. And not only does it need to be structured right if you're doing that annuity, so that could be a problem. Or the banker initially said, well, I want to manage all this money. Well, that's a problem too, because you're not doing the right thing by the client by managing all the money. Because they need that guaranteed income because they're not going to have an income for many years. So that's not right either. So let's say they stumble across or they have an attorney who does this all the time and has a settlement annuity person. And they have, okay, you have $3 million to work with. Well, most settlement annuity guys or gals that are salespeople, they're going to try and sell you or maximize that annuity and put the most amount in that annuity that they possibly can because that's where they make their money. That's not necessarily good either. So anyhow, I happen to have a specialist I work with, and that's all she does. She meets with attorneys, lawyers, and more specifically, she meets with families to do this, to set up this settlement annuity. And her typical way that she works is she wants half of that in a settlement annuity and half of that to be managed in regular funds for future growth. They want to take care of that income instantly, but at the same time, they want to leave money for growth. Now, her philosophy and her strategies work, and they're terrific. When you have someone who sells you all settlement annuity, we're just going to get an income for the rest of your life, or a certain amount of period of time through this structured settlement annuity, which is tax-free, which is great. But what happens if down the road that money's not enough? Well, if you listen to the TV, you call J.G. Wentworth. And what do? We'll buy that annuity from you for pennies on the dollar. So now you're really, I can't use this on the radio, but you're not, it's not good, okay? Because you're not going to get your value. There's a word for this, but you're not going to get your value for that product if you have to sell it to a J.G. Wentworth. They are like buying up income streams for pennies on the dollar, and they look for these situations. And that occurs when everything you got gets put into that, or too much of your annuity gets put into that, to where you don't have that flexible fund down the road to fund other things. So it's very specific. So I did get that private banker on the phone and had him speak to my settlement annuity person. I'm going to bring her on the phone one day. I'll bring her on as an interview because it's such a valuable service. and she's so brilliant in what she does, and she makes the attorney look good. The attorneys, they really don't understand this. Even the good attorneys, that's not their field. Their field is being an attorney. And you want to have a specific attorney who works with injury things that knows who to call us to set up this. This is the rest of your life. You got a settlement and you can't work anymore. This is the rest of your life. You need to do this properly. And like I always say, and like you've heard on many programs, the best time to plan is when you don't need to. When you're young and healthy and everything's great, that's when you need to buy insurance and protection. But if you run into a settlement situation, give us a call. Let us get you situated properly with the attorney, with a settlement person, and financial advice that's going to work for you and your family. You're listening to the Main Street Code, and this is Neil Himmelstein. I can be here every Friday at 3 o'clock, 631-647-4694. Listen to me every Friday at 3, and we're going to be right back. Welcome back to the Main Street Code for Financial Success. I'm your host, Neil Himmelstein, and if you were listening before the break, we were talking about settlement annuities, and if you're in a situation where you have a large claim coming in from malpractice, an accident, a disability, that you need to call us because things need to be structured in a tax-free way and a tax-deferred way. They need to be structured properly for you. And this is the kind of advice that we give, and we're asked by attorneys and planners, and this is how we work. I mean, this is great use of my time for people to come to me and help them, guide them along the way. Something else came up this week too. So, there's a lot of stuff going on. So 2 different times this week, I had an agent come to me where their client is disabled. They had a small claim, not a lot of money. They have kids, and they did buy life insurance, but they bought term insurance from, I don't even want to name the name of the company, but she wanted to know, can we convert these policies so that we have them for my children? I mean, they weren't going to die right away, but at the same time, their insurance was going to end in 5 years, and they're disabled, and then they're uninsurable at this point. So that's when I talk about converting your term insurance and having that availability to do it. This is the situations where you need to do it. You still want to take care of your family, but now you're in a rut because you're not healthy enough to get insurance. This is why I say when you're young and healthy and you think you don't need it, that's when you need it most, because that's when it's cheapest and easiest to get. When you need it, you can't get it. When your house is on fire, you can't buy fire insurance. Very simple. Yet you have pundits on the radio, on the TV, nonstop. Buy term, invest the difference. It doesn't fricking work. Susie Orman doesn't work. She's a fraud. I'm sorry. If you like Susie Orman, that's great. She's very personable. But what she's preaching does not work. Buy term, invest the difference is one of these phraseologies that doesn't work. And here's a situation where it just doesn't work. The term runs out. You didn't have the extra cash to invest. So now you're disabled. Now you have no insurance and no cash. Great plan. When you're planning for the long term, you need to build insurance. I'm not saying term insurance is bad, and I'm not saying investments are bad. They're both fantastic tools. However, they need to be structured properly. If you're going to buy term insurance, you need to make sure that you're buying term insurance that you can convert to a permanent plan later, and this is the reason why. You may not be insurable later. It's going to cost a lot more money later. If you could buy permanent now, great. If you could buy permanent and some term, better. If you can just buy all permanent, the best. So every insurance situation is not right for everybody, but you want to buy the right things even when you're not making that much money or you're young and you don't have that many dependents. But in long-term planning, you need to plan it out properly and buy the right products from the right people. So these two people are in another bad situation because they cannot convert this term. It's going to end. So all the money they put into this cheap thing, this cheap term insurance, is gone. They're left with a piddly little income. The kids won't be able to go to college. And what a shame, because they didn't plan properly. And that's a shame. Now, I went to a big conference with, and I mentioned this last week in Florida, with about 30 different insurance providers who I represent. By the way, I'm completely non-biased towards insurance companies. What does that mean? I represent every insurance company. I'm a wholesaler for them. People come to me to buy different types of insurances for different situations. One of the things that I've noticed is, yes, we've talked about on TV and on radio, buy term, cheap this, cheap that. And what the insurance companies have tried to do is use artificial intelligence to do underwriting and make it quick, make it easy, make it for these TV guys for you to call up and get term insurance for pennies on the dollar, even though it could be like a car without wheels that you can't convert or has no living benefits, but it's cheap. But the amazing thing with all this electronic and all this quick and all this artificial underwriting that they do behind the scenes to get you coverage or not get you coverage, they have a very low placement rate. What does that mean, placement rate? Placement rate is, I call you up, I want to buy $100,000 of insurance, and you quote me a price. You know, I'm some random guy on the phone, and he says, oh, it'll be $20 a month, and it comes back, and it's $60 a month. Well, why is that? Well, because you're rated because you have high blood pressure, or you're fat, or you know, you have high cholesterol, or you have diabetes, or nobody's perfect. Okay? So this is the moment of truth. Okay? It's not just about price, and you may not get what you want, but the skill of underwriting has been lost. Underwriting is an art. The insurance companies say it's a science. No, it's a science and it's an art. I can't tell you the way we underwrite at my firm. If you have health conditions, we get you covered. I had a gentleman with a 10.6 PSA. If anybody knows what that is, any older gentleman out there or women who have, seniors, they do a PSA test, which levels if you could possibly have cancer, and anything over 4.0, for prostate cancer is considered cancerous to an underwriter. Well, because the client came through me, through one of my agents in Florida, and I was concerned. I asked him a question. Now, he had been declined many times before because of his high scores. But I said, does he do any horseback riding or anything? Oh, he sells horseback riding equipment. Sells horseback riding. Yeah, he goes riding 4 days a week. Well, I know, because I know, that could create a high prostate level. So with that, I had one insurance company, out of 10, by the way, one insurance company who listened to my story. I wrote a nice letter. I talked about his horseback riding, and I said that this could be the cause of the PSA. They ran a special blood test with his existing blood. He hadn't had called a free PSA test. They gave this gentleman preferred underwriting for $3 million at 72 years old to get that coverage that he wanted, okay? And nobody else in the country knew how to do it but me. Not that I'm the greatest in the world. I think things out, and underwriting is an art. And I know that art. I've studied that art. I have an underwriter on staff, and we go over cases, and we work with people. We don't work with computers and robots. We work with people. And the insurance companies we work with listen to what we have to say, because we tell the insurance company when we issue an insurance policy about the person. Okay, this is why you should insure this person at the best class, because they exercise, they do this, they do that. We prepare the case so that when the underwriter looks at the case, they go, oh, I know John Smith. He's a good parent. He works well with people. He's, a family guy. Okay, he's got blood pressure, but you know what? He walks every day, and he's trying to control his blood pressure, and he's trying to control his weight, and he goes to the doctor on a regular basis. So the underwriters give us credits for that and say, we're not going to rate John Smith. We're going to give him the best class because he knows he's got a problem, but he's taking care of it. That's a good thing. It's debits and credits. That's the art of underwriting. That's why people come to Main Street Planning Group and reach out to the Main Street Code for financial success. And I hope that you've learned something today, and I learned something from everybody every day. I'm here every Friday at 3 o'clock. This is Neil Himmelstein, 631-647-4694. Or look at my website, themainstreetcode.com. Or you can always check me out on Spotify and Apple if you missed an episode at the Main Street Code. Thanks, everybody. Have a great weekend.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or